So, for those of you who don't know me, my name is Tessa and I represent Potato Impact Partners alongside my colleagues Sarah, Bernice Andrews, and Linda, who are also on the call and are giving a wave. Um, for those of you who are not familiar with us, Potato Impact Partners, or PIP for short, we're an impact investor spurring positive contributions to food security, climate action, and resilience of coastal communities through investments in sustainable seaweed innovation. We started in 2023, and we now have a portfolio of four companies and five funds. And PIP is also a subsidiary of Potato Productions, which is a group of social technology ventures in Singapore spanning, design, media, publishing, film and entertainment, education. So we have a lot of sister companies. It's very exciting to be part of such a large group. And with Seaweed Squad, we're now going into our third year of Seaweed Squad calls, which is just crazy to think about. And we started in 2024, this initiative to really contribute to knowledge sharing, promoting community, network, collaboration, co-investments across different regions, because we believe there is so much importance in creating partnerships and investing in the ecosystem, if you will, because ecosystem work isn't just support work. It really is the core of what drives success. So thank you for being here and being part of the conversation and learning today because you all really make this space what it is today. Um, I know I've done a lot of talking. I promise to relinquish the metaphorical microphone very soon, right after I give you the plan of how today is going to run. So, as you know, today's session is on impact measurement and management, and we'll have a very, very special fireside chat with Marianne from the Baster Foundation and Azulito Fund, and Ingrid from Katapult Ocean, moderated by PIP's very own crowd favorite, Bernice, and I'll let them all introduce themselves very shortly. For the fireside chat, we've allocated half an hour with some prepared questions, and then we'll transition into breakout rooms, which will be around 10 minutes. So you can meet some folks from the ecosystem and the community. And then we will end with a large group sort of plenary and sharing. So you can ask any remaining questions you have to our speakers or just share any thoughts you have from today before moving into the closing section. So without further ado, I will pass it to Bernice for our fireside chat.
Thank you, Tessa, and thanks everyone for being on this call. Really glad to have you, Ingrid, and Marianne join us as well. Thank you.
Yeah.
So before we start, perhaps we could have a round of introductions for you to sort of talk about your work and the organization you're with and your work in seaweed. So Ingrid, would you like to start?
I can start. Hey, good to see you all. A lot of familiar faces, but also some new faces. That's good. I'm Ingrid. I'm Impact Director in Katapult Ocean. So we invest in ocean startups, so early stage, broader than seaweed, but within the ocean space. We have 90 investments until now and are continuing our journey. We started our journey in 2019 and we've done investments since then. And I'm heading up the impact work in the organization. We have an accelerator program, so we teach the companies how to measure and manage their impact. And then, of course, the impact report we have as well, where we aggregate the results. And I'm also responsible for the SFDR regulations and our how we work with that in Katapult.
Thank you, Ingrid. Marianne?
Hello, everyone. I'm Marianne Beister. I'm zooming in from San Diego, California. I wear multiple hats. I'm a trustee to a couple of family foundations. I'm an impact investor and a documentary filmmaker. I'm mostly focused on what I would call entrepreneurial nature-based solutions that have positive environmental impacts as well as improving community health and wealth building. I have a 30-year career in engineering and the consulting industry and I'll touch on this later, where I worked on corporate environmental management solutions, but nothing linked to the oceans at that time. In 2017, I'd already worked as I'd wound up a consulting business that I ran and had been on two advisory boards for two business schools, MIT and UCSD Rady School. And I had a pivotal moment where I was asked to join the Directors Council of Scripps Institution of Oceanography, which I did and helped start an ocean accelerator there. And that was when I started seeing seaweed solutions. And since then have been involved in, I guess, a love of seaweed, but also there's some humility in there on the extent that seaweed solves all problems, of course. But I have seen it as an opportunity, both philanthropic, also culturally through art and food, and as well as an investment.
Thank you, Marianne, and for sharing your journey towards seaweed. I think I'll do a quick introduction of myself as well in my role at PIP. So I lead impact strategy and management at PIP. I think it's in terms of thinking about how our two core areas of work, both investments and in terms of partnerships and ecosystem building, could be serving our impact goals, which Tessa had just shared about, and also to come up with the systems and the processes to deliver that, right? So in terms of the direct investments that we do in startups, they'll be related to products in seaweed cultivation, biostimulants, animal feed, replacement for carbon-intensive products, and also in funds, currently ocean funds. I think the point of this really is to try to extend the impact of seaweed to in ways that otherwise we could not have done as a small team with limited resources. It's also a point of a way of using capital to signal to other investors about the vast opportunities in seaweed. To borrow the words of John Sukas, a previous panelist in the Seaweed Squad Call, the crop of the future. So the other part of the work we do a lot in is the ecosystem building side. And our partners and our networks span across all kinds of organizations and funding mechanisms for seaweed. And that's also why we're really heartened to see this wide array of different organizations here today. People who work in philanthropy, grant making, in impact venture, family offices, people who deploy innovative finance or blended finance models, NGOs. And I think that actually reflects how seaweed is multi-impactful, and it lends itself to multi forms of capital. It spans multi-sectors and multi-region. And I think I'm trying to see that as a preface to this fireside chat, as we think about how we want to measure and communicate our impact on seaweed as funders. We're hoping that this could be a good way to get the conversation started and to dive into some key questions, some foundational frameworks and structures, because it can be quite complex, given the multi-dimensional of seaweed and the different sectors and regions it covers, and different stages as well, right? And also, just to be honest, to recognize that we don't always have all the answers so far, but we do have quite a lot of good starting points. So on this note, I'd like to start the fireside chat. And we'll start with a starter question in terms of, since we know that seaweed is an impactful solution and we have recognized that. So to Ingrid and Marianne, are you looking to allocate actually more capital to seaweed since you're looking at impact opportunities? Are you also seeing greater interest in seaweed innovations from the other investors in your network? And why might that be so? Perhaps Ingrid, would you like to start?
Yeah, I can start. I see Marianne is nodding a lot, but do you want to start, Marianne?
No, it's a habit. It's okay.
Okay. Yes. Yeah, we have done quite a lot of investments in seaweed. It's quite broad, actually. It's a lot of use cases, so that's what it's interesting. And I think even though it's been a bit up and down lately, I would say with seaweed companies, I think that's due to probably majority of the market. 98% of seaweed is produced in Asia. So we have 50% of our investments in Europe and 30% in the US and rest of the world 20%. But that's definitely we see more opportunities in the whole world. We're also raising the Asia fund now, so they're focusing, of course, more on seaweed as well. But I think the use cases are still market is not right, it's not mature yet. So I think there will be a lot of opportunities in the future as well.
So when I think about my family office and the fund that I put together for ocean-based investing, I would say that absolutely, I expect to invest more in seaweed. I would separate it into two categories, place-based and technology-driven opportunities. So for place-based, these will be companies where there's a strong possibility for regional economics improvement, as well as health and wealth of those communities, in addition to the environmental impacts. So this, a part of a continuum that I have would be integrated with my regenerative land and oceans interests. So aquaculture and agriculture, and so seaweed will be part of that. I expect that to be both equity and non-equity, so notes and debt, which we can talk about later. The technology-driven opportunities, I would see that being improvements in the seed supply chain, and, selective opportunities there. I would also anticipate that any investment in seaweed would very likely be a crossover, where it's not only industry improvement, but also crossover to seeding opportunities for conservation and restoration improvements, as well as other sectors like lower trophic aquaculture, small fisheries, ag tech, these types of opportunities, possibly even dual use, where we see some national security technologies coming in to be deployed. I would expect that to be mostly equity. And I guess just to round out, I would say for opportunities, I have historically been very US focused, but seaweed has taken me internationally, and I would expect that to be the same. And Bernice, do you want me to talk about the interest level? Do we still have time?
Please do. Thanks for checking.
Okay, so I would say that in some ways I'm seeing greater interest, in other ways not yet. So for those that I interact with that are also investing in seaweed, I would say that there's an increased dedication to continue investments, to be better at our investments, and to seek ways of helping the funds and the companies that we're investing in. I just would also extend that to those that I'm involved with that are also investing in aquaculture. I think we're in. We just want to get smarter and more engaged in how to raise this ecosystem, as was mentioned. For those that I interact with that are involved in ocean philanthropy and investment, I'd say it's still very early. There's genuine interest, but there's still a lot to learn. I would anticipate that it would be hard to see those individuals moving into direct investments. But I also think that they are candidates to be in funds where seaweed is part of the portfolio, and there wouldn't be any pushback on that. And then finally, for those that I interact with that are in technology, let's say biotechnology or even kind of climate, I think that's a hard group. And the reason is there's a dominant mindset around unicorns. And I think even if they say patient, they might not be as patient as might be required, and the returns might be higher than might be available for many of the seaweed investments. So that's kind of like a tiered approach to say that there's varying levels of interest, and I think some work to be done for education.
Thank you. Thank you, Marianne and Ingrid, and sharing on the perspectives of that sort, and also the varying spectrum of interest in capital, and also the motivations and risk return profiles that inform those interests. I think that's where we try to think about impact measurement in that sense, because one of the definitions of impact investing is actually to think about how impact investments are investments that are made with the intention to generate measurable social and/or environmental impact alongside a financial return. In your opinion, do you think that impact performance tracking, reporting, and management could be important to current investors in seaweed and perhaps attract new investors to this field. Why might that be so, in your opinion? And is that for you as investors a key area of assessment when you review the opportunities? For instance, Marianne, when you look at funds as an LP and you invest in directs as well, is that an area that you look at?
Okay. So this is where we have time management. So I'll look for a wave um, on my length of response. Okay, so I absolutely look at impact in my investing. So over 10 years ago, I began defining specific target funds or target levels for ESG impact. So environment, social, and governance is the framework that I use. So it's across my portfolio, and so that's essentially five basic sub asset base asset classes: cash, bonds, public equity, alternative equities, and real estate. So across the board, I've defined different target levels, and then across the portfolio, I again look at how might my investments improve the health and wealth of communities as well as the environmental sustainability. That said, I'm also using the word regenerative a bit more because I feel like that gets to more of the point of being non-extractive to people and the planet. So seaweed is definitely aligned again with my interest in kind of the regenerative ag and food, both on the philanthropy and the investment on the investment side. So if I would step back and say, is this important? It will be important for seaweed. I'd say, you know, if you go up at a 10,000 foot level, that there are many investors that want to have a positive impact on the environment and on society, and have decided to shift a majority or a portion of their portfolio into these types of investable opportunities. But making these investments it just simply is not that easy. Investment in ESG, again, environment, social, and governance, has been challenging in part to the limited and also the misleading impact analysis. So, in an attempt to raise more money, some impact funds are simply meaningless and, at the very least, misleading. And don't even get me started on the public equity impact sector. So, in addition, I've seen numerous pitches from private and impact funds and ESG indices, and I think all and maybe other people can comment on the greenwashing that is occurring, including in the ocean sector. I'm also particularly interested in the social and governance factors, and those are often very weak. How people are treated and the fair distribution of the rewards of value creation that they created is often left out of impact analysis. And essentially, that's an assumption that workers are a cost and not an asset. And so that's not an oversight that I'm willing to make because I think, wealth inequality is at record levels, and especially in this country. And so looking at those factors is important to a number of people. So I would say that because there's a growing amount of frustration, skepticism, and even pushback on ESG, that investors who actually want to have an impact they think it's timely. They think it's timely to take what exists. There are really good, thoughtful impact frameworks and performance standards. The challenge is being more intentional and more transparent in how they're deployed. And so I'll end with that. I think that I won't end with that. I think there is a level of humility that we should have. We do understand a lot about how the ocean works and how the seaweeds roll, different types of seaweeds in the oceans. But there's still a lot that we are learning, and we need to watch out about the impact claims that we're making with seaweeds.
Thank you, Marianne. Indeed, I think there's been quite a bit of caution on that front. And that would lead me to my next question. But before I do that, I'll pass the mic over to Ingrid as well to expand on that.
Yeah,
In
I can
terms
just
of,
say how we're working just when reviewing companies for a portfolio, starting, of course, very high level with the problem and solution and impact the companies have. So what kind of problems are they solving that can be social problem and where they have a social impact. We have some companies where there's community building as well and enriching the communities. Or it can be environmental issues they're targeting. But that's important for us to understand, like the first step. And then digging in deeper a little bit with the 5 dimensions of impact as well. So who are they influencing? How are they influencing them? How much does it last? And is there a risk that the impact won't happen? So this is just a screening before we're taking them into interviews or before we're doing the full due diligence. And of course, also the ESG side, the risk of the companies. Is there a risk? Are they operating in countries with high corruption, for example, or labor rights violations? Then we need to consider that as well when looking at it. And of course, look if the companies have policies for this. If they don't have, then they should have it if they're operating with high labor violations, for example. Or if there are any other sustainable risks that we might have to consider. So that's like so we're looking at both the impact and ESG. So impact, how the companies are contributing to solutions, and ESG side, how they're not doing any significant harm. This is in the EU SFDR regulations as well. And then they have to have good governance as well in the companies. So that's how we do it.
Thank you, Ingrid. I think you also have been instrumental in starting and implementing a framework for impact and measurement in the ocean sector called the Ocean Impact Navigator, that's part of the 1,000 Ocean Startups Coalition. So I think from Potato Impact Partners' point of view, we've actually benefited a lot from your guidance and learning from that. Could you also expand a little bit on that piece of work as well, in terms of answering, the idea of how can the impact of seaweed companies be measured and in a meaningful, credible way?
Yeah, I think we started in 2020. All the members of the 1,000 Ocean Startups had the same issues. Companies were reporting impact, but they were reporting a lot of different things, and it was impossible to aggregate it at the fund level. So when I started at Katapult, the companies just wrote in their own metrics in the financial reporting tool, and it was hundreds of different metrics. Impossible to get an overview and also to aggregate that and say, okay, this is the impact we're creating with our fund. So we were a group in the 1,000 Ocean Startups that worked with Systemic and created the Ocean Impact Navigator. And that's it's a framework for ocean impact, but it's a set of 34 KPIs that you start measuring with. And I would say it's a mix of outputs and outcomes. So it's just for seaweed, for example, you're measuring tons of seaweed produced, and that's very high level. It doesn't say very much about the impact actually, but you need to dig deeper. And that's what I say to the companies that we're working with in our program, in our portfolio, that, okay, start measuring some things and then you can dig deeper later, instead of waiting until you have the perfect data, the perfect framework, because that won't happen. I think it will always develop. So by starting to measure, okay, tons of seaweed produced, or if they use seaweed, then they can dig deeper. Okay, is this used as fertilizers? Is it used as an alternative to plastics? Is that how we use it? And then they can dig deeper there as well. Okay, how is this fertilizer influencing the soil and the marine areas around it? So they will start there. So it's just trying to gather everybody at the same metric, and then of course it will be in seaweed is quite it's moving in many different directions, the impact there, but it's a good starting point at least.
Thanks, Ingrid. And I understand that you've also expanded into the IRIS Plus framework that has been, as part of the GIN Global Impact Investing Network.
Yes, but we're not making it too complicated for the companies at the beginning. So we're asking them to pick the Ocean Impact Navigators and metrics there and start with that, and then they can build out. But we have a tool internally where we connect the OIN metrics with the IRIS Plus metric so that they see that the connection there. What we don't want them to do is just to add SDG, just a number of SDGs. Some of them start with like 14 SDGs. This is everything we do, but we want them to be transparent in what they actually do and not claiming that they have educating the world if they have an internal workshop. So it's important to be transparent with what they measure and how they measure it and the results and what they don't know as well. And not to overclaim and say, okay, this is actually what we contribute with. We can't say that the whole thing is due to us, our work, but try to limit or be transparent at least what they contribute to.
Have you found that perhaps with the use of the Iris Plus framework, it allows the startups to actually plan ahead for outcomes down the road and also to raise capital from larger institutional investors?
Yeah, but I would also say just in the program we're starting with the companies are working with being very clear on problem, solution, impact that they have. Just a statement there, just one 1 minute in that. And then the theory of change for them to understand, okay, the connection between the activities they do and the impact they want to have. And some of them, depending on how late stage they are, some of them have, okay, we know that we're producing this amount of seaweed or this number of tons of seaweed. And then they need to okay the outcomes of that. What does that lead to? That's my question every year. So yeah, what does that lead to? What happens next? What happens then if you produce this number of tons of seaweed? What happens next? Then they can ask that, and then they can connect it to the impact they want to create. So some of them will be like earlier in that like journey, so they can describe their activities and maybe the outputs, but not the outcomes yet. They have to dig into, but at least then they know what to dig into when they're getting there. So I think that's the important process of the companies to understand. And then also, of course, we want them to. We're also asking them to report on the potential negative impact or think about that as well. So can we have a negative impact as well? Is there a risk of that? Because then when they have it up there, when they've talked about it, then they can also mitigate that risk of the negative impact.
Absolutely. And we found out also it's been easier to ask the companies to track and report their impact when the metrics are also embedded in their business model. As you mentioned, the volume of biomass produced, how that's translated to biostimulants, and the sales related. So I think continuing on this line, we've talked about what might be some key areas or pitfalls to look out for. I think specifically on this point, Marianne did bring up, a question previously in our conversation. How might the impacts and the tracking of them depend on the stage of the company? Does that actually change over time and evolve over time? And the different kinds of metrics that could be required. Don't know if you have any thoughts on that, Marianne.
Yes, and I just want to say, Ingrid, I agree with what you said, and maybe in my response will highlight a few of those things that I find increasingly important. So, initially we really want these companies to not be too burdened, as startups. So, but also set the course for the future. And so if they're supposed to be impact companies, let's say they shouldn't be extractive from the very beginning to people or to the planet. And also, I think that looking at the downside is something that many of us will do, like as the first pass on due diligence. If they've recognized the potential risk of being extractive or creating damage, how are they going to address that? Bernice, you also mentioned something. I think it really, especially in a startup, is what's driving them, what's their mission and their purpose. To what extent have they defined stakeholders beyond shareholders, right? So that's a good start. Is there any indication there are high road business practices that they might ultimately be a B Corp, right? That might be a good start. Again, going back to you can look at like are they paying a living wage, or have any intention of sharing profits or equity? Is there any indication on that pathway that that's built into the business model and some evidence of that in the pro forma? So I would say with on the earliest stage is to watch out for overpromising, trying to cover too many of the ESG impacts, right? Because as was said, but I want to put a finer point, it really matters where you're doing the work, what you're doing, and what your product and your services are. So you've got to really focus on what to highlight from the seaweed standpoint. Um, I'll just repeat it because it's worth repeating. If I don't see a labor component, I'm not interested. And primarily because I think most of us know that, especially in the ocean space, there's definitely some human rights issues. So I want it acknowledged and I want it somehow resolved in some way, some modest way. Not everybody can do everything, but I want to see a path towards that. So I'd be looking for practices and policies with milestones for meeting objectives and maybe some initial measurements that they or research that they can refer to, and some sampling perhaps that's built in, continuous and regular monitoring, I think, as they grow in size. It always looks good to me if a startup is presenting that they have a researcher on board to help with impact analysis across any critical sector of the ESG spectrum. Having a nonprofit in the back end, that looks like a good sign to me. And let me see, what else would I would say? Yeah, let me see if there's anything else. Um, sometimes with a startup, their exit plan also is a sign of what kind of ESG impact that they'll have, especially on the S&G side. So how are they going to, again, I've mentioned it, share profit and equity with the employees, but also look to have in the exit some more resilience in that community, even though they might not have majority ownership through the investors. So that might be something else that startups can look at. But definitely the ESG SDG framework, I think Iris looks like a solid foundation. Putting it in a larger framework, but narrowing in on what's really important is management of time for a startup.
Absolutely. I think besides the structure of the frameworks and the foundation that gives it a system, it's really the values also and how they approach the business. I think on that front, that's also how we assess startups, especially when they're really early stage and lack the capacity to actually put in proper frameworks and metrics to measure the impact. And that brings me to my next point in terms of what other key challenges or limitations have you found so far in looking at, your work with startups measuring their impact and hoping to track the results and even in the reporting. For instance, I think on our front, we found that most of the self-reported results might actually require some kind of verification from a third party, but many of the funds on our side actually lack the resources to do that. Right. And also I think on the biodiversity front, there's monitoring solutions out there, but they can be quite costly in terms of understanding the impact of seaweed on biodiversity improvements. So happy to hear, from you, perhaps, Ingrid, on some of the challenges and limitations you've come across.
Yeah, I think it's important that it's possible to, if not prove, but at least as close to proof as you can get. So to not overclaim, I would be very careful with that. So we're not asking, so CO2 emissions, we're not sequestering. We're not focusing on that in the companies because it's still early stage. We don't know. It's not proven yet, or not well enough at least. I just that's good with AI now. You can find research reports easier. So there are some indications that you can claim some sequestering, but we haven't done that yet. We're looking at other positive impact results from the companies and ask them to focus on that first. I think for it's challenging. I think the market, since it's quite early stage, we're expecting much more, but just the willingness to pay to find that in the market for the solutions, that's been a bit challenging up until now, the last 5 years for some of the solutions at least. Of course, the plastic challenge is huge, and we would like to see solutions where seaweed could replace plastics. So it got some promising companies there now. Luckily, that's good. Also been a lot in food and feed companies. Just to get the price point high enough that it can compete and outcompete the more or less sustainable solutions. That's I think quite challenging for the companies, but getting there. You're muted now, Grace.
Sorry, as you're saying, so to add to that point, for many companies in the global south, they actually lack a lot of infrastructure that allows them to effectively monitor their impact or even to understand it, right? To report it. And on this front, I'd like to actually quickly bring it back to Marianne for wrapping up in terms of how might, funds, since the US and LP as a funder could do better reporting, or whether certain things that they could look out for in terms of requirements towards the LP in terms of
Okay.
impact measurement.
Some of it's been said before, but I'll say, kind of reiterate it. So really work on not overpromising impact to the extent it can be regional or, anticipating regional impacts. I think that's also something that I could and species specific, very, very, very helpful. Again, watching out for over measurement. I think I'm part of a group that just we want to see progress, but so reasonable amounts of measurement along the way. Maybe also indicating where that measurement might align with compliance or on a pathway to an industry certification. I'd like to see funds be a little bit more concrete on the unit economics. Again, these are global markets in many cases. So it really pushed back on unrealistic pro formas. Again, that's probably more on the social and the governance side. I think it's very powerful when a GPs can say that they actually said no to misaligned investors. So please do that. It only takes one investor to take an investment or a fund off course. And so I think it's really essential. Many of us will look at who are the anchor investors and the alignment of the other investors. And then with the other thing, this isn't really particularly to a particular fund, but the fund structures. If patient, we're talking about patient equity financing in most cases. So how can that be a 10-year fund? Really? Right? I think we really seriously need to be thinking about that. I think in many cases it's overly optimistic. And so I think there needs to be some more thought on that. And maybe that means evergreen funds. But some of the courses that these companies are on, they're going to need more non-dilutive. They're going to need some nonprofits. They need some grants. They need infrastructure and supply chain connections that some exist, some don't exist. And so I'd like to see funds kind of looking at how their role fits into that ecosystem. And again, maybe some considerations for some evergreen structures versus 10-year funds.
Absolutely. And I think it's also really helpful that we have this group of different funder types in this conversation. So we have, different exchanges and different ways of how we could collaborate in extending the impact across the spectrum of time too. So I think I'm mindful of time. I think many of you might have questions to ask our panelists, and please do so either in the Q&A in the chat. But right now, I'll pass it back to Tessa for us to go back into the breakout rooms.